Wall Street tumbles after oil prices hit $130 per barrel, which has caused the average price per gallon in America to rise to $4.32 a gallon. While inflation sets fresh 40-year high, February CPI rises 7.9% over last year. This is just some of the news that is affecting the stock market and that we're going to get into today. Welcome back, everyone. My name is Jamie Paris. Today is the third episode of the Challenge Fund. This is a weekly series where we pit 4 different investment strategies against each other to see who wins on a weekly basis. I used 3 other financial YouTubers and myself to come up with these 4 strategies. The first one I chose was Graham Stephan because he likes to invest into ETFs, which means exchange traded funds. He likes to dollar cost average into these, and I like this type of investing because it's really easy and it's stress-free. Next, I wanted to include Joseph Carlson because he likes to invest in well-run companies that pay dividends over time, and they also increase their dividends over time. This is a great way of earning passive income on your investments. Next, I'd like to include Jeremy from Financial Education. He likes to invest in small cap companies with good fundamentals that have huge growth potential over time. These may have a little bit more risk than the other strategies, but I thought it'd be a fun strategy to include in this portfolio. Finally, my strategy for this fund that I picked for this year of 2022 would be more recession-proof stocks. With the inflation and everything else that's going on, I feel that a recession might be coming, so I thought this would be another good strategy to include. I did my best to pick investments from these YouTubers from watching their videos, but in no way is this a true reflection of their portfolio's performance. I started this journey February 28th by investing $500 into each of these portfolios. Then every Monday, I'm going to put $100 more into each of these portfolios and see how each one does every week. And then we'll also look at every month, quarter, and things like that. Throughout the year, good or bad, I'm going to show you how each one of these portfolios is doing throughout the year 2022. So let's get started. All right, let's take a look at each index today. I'm recording this about 15 minutes before the stock market closed because it's my daughter's birthday today. Happy birthday, Haley. All right, the Dow Jones for the week is down about 0.71%. Year to date, they're down about 10%. Now let's look at the S&P 500 for the week. They're down about 1.56%. And year to date, it's down about 12%. NASDAQ for the week, it's down 2.13%. And year to date, it's down 18.57%. And then finally, the Russell 2000 for the week, it's down 0.54%. And year to date, it's down 12.59%. So it looks like nothing is safe right now in this market. The news for the stock market just continues to get worse and worse. With high inflation, soaring oil prices, and the war in Ukraine, things just seem to be getting bleaker and bleaker. Fear for investing in the stock market has continued to be at all-time highs. So let's just take a look at some of these news stories and talk about them. Next, let's talk about the CPI data and what this means for you. Not only do I do a weekly series on the growth fund showing you options on how to invest your money and where to invest your money, but I also have a weekly series on creating and maintaining a financial plan through budgeting. If you want to check out my free financial plan spreadsheet to get your finances under control, please watch this video playlist that I have. It should be in the upper right-hand corner of the video right now. This playlist will show you how to use the spreadsheet to get your finances under control. So the CPI that I highlighted here is the 4 items that mainly focus up of your living costs. So this is just attacking everyone's pockets on the everyday needs that they need to live through life. First, we have the food at home, which is your groceries, up 8.6% year over year and up 1.4% month over month. Then we have our fuel, which is up 43% year over year and 7.7% month over month, with March probably going to even be worse. With gas prices being over $4 a gallon, this ends up being the tipping point for most Americans. A new survey found that 59% of Americans will make lifestyle changes as gas reach record highs. While 2/3 of Americans felt gas prices were too expensive just a few weeks ago at $3.53 a gallon. And if gas were to reach $5 a gallon, which it has in the western part of the country, 3/4 said they would need to adjust their lifestyle to offset the spike in the pump. So this just shows how much less money people are going to have to spend on other items. Then we have the utilities to heat our homes. Year over year, they're up 23.8%, while month over month, they're up 1.5%. And probably going to continue to rise. Finally, on this CPI report, we have rent. So the rent has gone up 4.2% for the year and 0.6% for the month, where I think the CPI is way off on these numbers. Let me show you some articles that contradict this. On apartmentlist.com, it shows month over month rent grew by the 0.6% increase we saw in the CPI data, but it says it's gone up 17.6% year over year, where the CPI data said 4%. Where I live in Denver, they're saying on the news it's gone up over 20%. And then this article I found on Zumper.com says, Zumper's February National Rent Index shows the median 1 and 2 bedroom rents hitting new all-time highs at $1,300 and $1,700 respectively. If this sounds familiar, it's because the same thing happened last month and the month before. In fact, the median 1-bedroom rent has hit an all-new high in 9 of the last 10 months, and the median 2-bedroom rent has hit a new all-time high in 13 consecutive months. So if you're renting and your lease is coming up, expect a huge increase. And if you actually own a home, this is where you're safe from the inflation, because your mortgage payment will not rise as long as you're in a fixed mortgage. That's why it's so important on buying a house. I truly hope that this all slows down, as it will not be sustainable for most Americans. This is why I feel like a recession is possible, because if everybody's living costs just keep going up and up, they'll have less money to be able to spend elsewhere. Sorry for all the bad news, but let's get into the fun stuff and let's see who won this week's fight. Let's go to the ring. In the red corner, we have Jeremy, the small cap crusader. In the white corner, we have Graham, the ETF king. In the blue corner, we have Joseph, the dividend destroyer. And in the yellow corner, we have Jamie, the recession wrangler.
Let's get ready to rumble!
Coming in fourth place this week is Jeremy, the small cap crusader. Let's take a look at his portfolio. Jeremy's fund for the week was down 9.15%. So small cap companies just got destroyed this week, with Tattooed Chef being down 9%, Corsair 13%, Skyworks down 5.5%. Just goes on and on. Oatly down 18%. His best stock that was PayPal, which is only down 2.91%. In third place is Joseph, the dividend destroyer. Next, Joseph stocks. Let's see how they fared. So even the dividend stocks this week didn't do very good, with, let's see, Starbucks being down 7.8%. That's his biggest loser, with Disney right behind it at 6%. And there was only one green, with Costco being up 0.55%. So again, like I said, no stocks are safe right now. In second place, we have Graham, the ETF king. Looking at Graham's portfolio this week, it was down 2.42% for the week, with all the ETFs being down pretty much the same amount. And coming in first place for the second week in a row is Jamie, the recession wrangler. And finally, the recession-proof stocks were only down 1.28%. So again, this was the best for the week, with looks like about 4 coming in the green and the rest being in the red, with my biggest loser being at Waste Management at negative 3.78%, and the biggest gainer being Dollar Tree, 2.34%. Excuse me, Kroger was the biggest loser at 5.04%. So overall for the week, the challenge fund was down $95. So far, we've made no money on this fund, but that's all right. We're going to keep dollar cost averaging in and see how it goes. So that's it for today's video. Hope you enjoyed it. I'll let my dog Princess take this one away. Have a great weekend.
Hey, would you do my owner a favor and please smash the like button? And while you're down there, why don't you go ahead and subscribe as well? I'll wait. Thanks so much.